Hello? Hi, everyone. So welcome to the stream today. Very much excited, always coming your way. This is for the part 2 of financial statements for public sector entities. Yesterday, we looked at the overview of public sector accounting or public sector financial statements, and we look at the various things in relation to looking at the elements of the financial statement, discussing the qualitative characteristics of the financial statement, and also spending time to look at the various financial statement that we're going to be preparing, taking into consideration the IPSAS 1, and then focusing our attention on the income statement as well as the statement of financial position, or what we call the statement of financial performance and the statement of financial position. But most importantly, we also spend some time to look at the various workings that we're going to be doing, because remember I made mention of the fact that when it comes to the final account preparation, especially the workings is going to be critical. Here you can't do any pro forma, and you don't do any pro forma anywhere. You first make sure that you work your way out using the government charts of accounts. So we're going to be spreading our wings across the board today with a question that we want to look at, and we are looking at a question that is in the question kit, the ICA question kit. If you have any comments, any questions, let me know in the chat box, and also give us a thumbs up on the video when you join the stream, and also make sure that you share the video with your colleagues that will be interested in this. This is a done deal area, 20-mark area waiting for us in the exam hall. So it's very important for you to understand how the various items are treated and how we can extract the financial statement. So we're looking at a question in the question bank from the ICA Public Sector Accounting and Finance, and we are looking at question 33 on page 18. That is the Consolidated Fund Financial Statement, II, and that's the question we're looking at. For those of you who don't have the book and you want the question as well, you can send me hi on Skype right now, and I can send it to you right now on Skype. The ID is Premium Educator. If not, also, then after the stream, you'll be able to send me a message on WhatsApp on 05011499296, 05011499296, and then the question can be sent to you via WhatsApp. But if you want it now, you can just send me a hi on my Skype account, that is Premium Educator, and it will be sent to you. So let's see our chat box and let's see what's happening in there. There are some of you who already have a question. That is those of you who are directly studying with me. You have a questions already, so let me open our chat box and let's see what's happening in there. Okay. Any questions, you put them in the chat box for me. Okay, so Louisa, I see you. You are welcome to the stream. And then Patience, I see you. You are welcome to the stream as well. If there are any questions you have, you put it in the chat box for me. I'm going to be answering all of those questions for you as well. And like I said, we're looking at a financial statement of public sector entities, and this is going to be the part 2, and we are looking at how we can prepare the final account. So let's go straight up to the question. We already have the overview of the various things that we need to look at. So I'm going to share my screen as well with you so that we can go through the question. Vincent Boster said, Mba is back. Thanks for your support. All right. Grace, okay, I see you. Good evening, all. Good evening, Grace. Obapa Adra, I see you. Okay, welcome to the stream. So some of you already have the question. If you don't, like I said, you can send me a message on Skype at Premium Educator, and you will get it. Or you can message us 05011499296 on WhatsApp, and you can get that as well in that case. So I'm going to share my screen with you so that we can walk through the question. Then I'm going to just spread everything on the board for the workings that we're going to be doing in that case. So let's go to it. Let me share my screen with you. So let's see. So there you go. You see the question on your screen. Some of you can take a screenshot if you want to. So you can just take a screenshot of it and then you'll be able to go through it. Now I'm going to scroll straight up to the requirements of the question. Then we break the requirements down. In that case, then we're going to also come back above to the trial balance given to us in here, and we'll be able to derive the things that we need to have. So let's scroll down straight to the requirements of the question. That is where our focus is. For 20 marks, the examiner said we should prepare a statement of revenue and statement of consolidated fund in comparison of the budget for the year ended 31st December 2018. Then we should prepare a statement of financial position of the consolidated fund as of 31st December 2018. Then we should prepare notes to the financial statement. Prepare notes to the financial statement. So we are preparing revenue and expenditure more or less like the statement of financial performance. And then also we are preparing the statement of financial position. The notes to the financial statement is where we're going to be looking at the various workings we did, as well as the accounting policies that we are going to be looking at in the workings in here. So that is our requirement. So let's go above at the beginning of the question and let's see what we have there. Okay. You are provided the following information relating to the consolidated fund for the year ended 31st December 2018. So we have the debit side, we have the credit side, and we see the items listed there on the debit side, on the credit side. One thing you must understand is that everything on the debit side, chances are that is an expenses item, and everything on the credit side, chances are that is an income or capital item or revenue item, okay? So everything is on the debit side is usually an expenses, everything on the credit side is an income, a revenue, or a capital item. But in this case, you're not going to have capital, you're going to have accumulated fund here. So this is the balance we have. We're going to come back to all of these. Let's see the additional information there. Let's look at that. The following has been extracted from the 2018 annual budget. So remember the statement we are preparing, we are looking at both the income statement as well as its comparison to the budgeted information. So the examiner has given us the budget for the year ended under consideration, and we see compensation for employees there, goods and services, directors, indirectors, non-tax revenue, all of that things there. Let's go to the additional information. This question is clean, it's straight ahead. We don't have a lot going on in the footnotes for this question, especially unlike the other questions, which have a lot of footnotes here. This is very clean, very straightforward, and we're going to just pick a couple of things up, and then we will be able to solve the question in that case. So let's see. Note 2. Consumption of fixed assets or consumption of fixed capital for the year ended 31st December, it should be 2016, all right? It's charged as follows. You don't know, after they converted the documents, you don't even know why the dates are scrambling over like that, but it should be 2018. It's charged as follows. So we see property, plant, and equipment, 20 million Ghana cedis, and the infrastructure is 30 million Ghana cedis. So capital consumption, you know, in the public sector, we don't do depreciation. What we do is capital consumption of fixed assets. So that is what we're going to be having in there. Then note 3 said the financial reports are prepared using current chart of accounts of government. So the current chart of accounts of government is where we are classifying the items into various headings, looking at direct taxes, indirect taxes, non-tax revenue, grants, social benefits, other tax revenue. So, yes, other tax revenue in that case. Then at the expenses column, we're going to have compensation of employees. So literally, we are given a clue on what we are supposed to do based on even the extract of the budget. So from the extract of the budget, we see the heading of the items that we are going to be looking at in the question. So let's look at what we do there. So we're going to go through the trial balance and then bring the items in there. Okay, like I said, everything on the credit side is a form of income, but it has to be classified. So we're going to be putting our pro forma up for the workings that we're going to be doing in this case. So let me make sure that when I'm writing, we will be able to get the feed well. Okay. So let's divide my board. Don't worry, I'll come back to big screen in a moment so you can see me after I divide my board. Okay, so I want to have as many rooms as possible in here. So at least 3 slides will help me to do a couple of the workings. So what are the workings that we're going to be looking at here? Some core workings we look at here. Sir, please, I can't find this question in the question bank. Oh, Grace, it's in the question bank. Look at page 18. It's on page 18 of the question bank. Check it out. Page 18. Check it out. Page 18 on the question bank. Let me know if you find it. Page 18 of the question bank. All right. So there are core workings we're going to be doing here. Okay, you're welcome. So there are core workings we're going to be looking at here and doing when it comes to the issue about preparation of the final accounts. From the government chart of accounts, we know we're going to have direct tax, indirect tax, and all of those items there, all right? So let's look at it. You've seen the items in there, and I believe you have the questions there already. So I'm going to stop. Okay, Grace said she's found a question. So I'm going to just stop sharing my screen. Then you're going to have me big on board like this. Then this is what we're going to do. We're just going to pick the item. Then we'll ask ourselves, what is it going to come under? Pick the item, ask ourselves, what is going to come under in that order. I hope you get the concept. So let me stop sharing my screen, and you're going to be seeing me, and then we go through it. So stop sharing. And let's go. So I'm going to set out my pro forma when solving the question. So based on the way we want to structure the question, we're going to start with our workings as always, which is sometimes called the notes, okay? Maybe we'll call it notes because usually we'll be looking at notes. Then we will tell the examiner that all workings are in 1,000 Ghana cedis, so it saves us some time there, okay? So all workings in 1,000 Ghana cedis, so that not every workings we will be bringing the Ghana cedi 3 zeros. I mean, it's too much work, okay? too many words for us. So let's go. Direct tax. Okay. Number 2. Now here in the exam hall, you're going to do the same thing. You're going to set out your pro forma like this. All right. In the exam hall, you're going to set out your pro forma like this. And you're going to leave spaces as much as you can, because remember, professional presentation is key when you are working in the exam hall. So direct tax, let's underline that clearly. And then number 2, I'm going to have indirect tax in here. Number 3, I'm going to have non-tax revenue. I don't know how many spaces that is going to be. Number 4, I may want to have compensation to employees. All right. Number 5, I hope my marker is visible. More or less like I gotta change it. Yep, a little visible. Let me see if we can change it. Josephine Annan, I see you. So compensation for employees will come. Then number 5, I would want to do public debt interest. I don't know, but definitely this is a regular customer that is going to be there. Number 6, based on the government charts of accounts, maybe we can do PPE, but we don't know what is really there. So is my line breaking or something? Okay. Okay. So let's stay with this, and then as we go ahead, we're going to be opening ourselves up with more of the items for the workings. So let's go. We see that a couple of the items there are all on the credit side. And so it means they are going to be income revenue or income items, or like I said, revenue items. Let's see. Okay, Kwabena Ajiman, I see you. Good evening. All right. So let's go. So the first item we see there is corporate taxes. Corporate taxes is not a magic, right? It has to go under direct taxes. So simple, corporate taxes. How much you got there? That is 200,000. That is it. Remember, we told the examiner that all workings are in thousands. The next one is personal income tax. That is PAYE. That is going to come here. Personal income taxes. We have that to be 120,000. It's a direct tax. Next item there is capital gain taxes and sundries. Capital gain taxes and sundries. Now, what type of tax is capital gain tax? That is a direct tax, because it is a tax that is levied on what? The profit you make on the gain you make on the disposal of an asset. So that is a direct tax, and so that has to come under our direct taxes. So capital gain taxes and sundries. So capital gain taxes and sundries. So that is how much? 50K. All right. Next one. Taxes on general goods and services. Taxes on general goods and services. Taxes on general goods and services. Definitely, this is going to be an indirect tax. So we come there. Taxes on general goods and services. And that is going to be 180,000. Then let's go. Next one, fees, fines, and penalties. Fees, fines, and penalties. These are non-tax revenue. So they will come under non-tax. Fees, fines, and penalties. That is 80,000. Next one, investment income. Investment income. That is also a revenue that the government is receiving, and it's a tax, non-tax what? It's a non-tax revenue. So investment income. And that is giving us an amount of 20K. All right. Next one, customs or custom duties. Custom duties. Where does that go? Indirect taxes. Because custom duties is part of indirect taxes. Like issues like import duties, export duties, those kind of things go there. Samson Hodo, good evening. I hope you're doing well. Give us a thumbs up on the video. That way we get more engagement. So YouTube can push the video so we can reach a lot of students. And make sure that you share the video with your friends and colleagues so we can get them to watch this specific lecture that will guarantee you 20 marks in the exam hall. So you make sure you understand the concept very well. Next one, grants. All right, grants. Now, grant is an item on its own. Remember yesterday I told you when it comes to grants, there are two ways that grants can be seen. Grants can be received by the government, and the government also pays grants out, okay? So when it's on the credit side like this, it means grants received by the government, okay? If it's on the debit side, that means the grants that government pays to the District Assembly Common Fund as well as to other statutory funds, okay? So there can be two grants in the question, and you don't ask, oh, which one is this? Which one is that, Darby? The grant on the debit side is the one government is paying, so that is an expenditure. The one on the credit side is the one that government is receiving, so that is a revenue. And then, assuming it's not put on debit or credit, then the clarification will be there. You will see grants to the District Assembly Common Fund or grants to other statutory funds. Then you will see grants received by government. So those clarity is going to be there. Nana Kofi, good evening. I'm really enjoying the lesson. I'm a first timer though. All right, that's awesome, Nana Kofi. You are welcome to the stream. So grants, we're not going to be classifying it under anything so far. It is going to be on the face of the revenue and expenditure account or the face of the statement of financial performance we're going to be preparing in a moment. Next one, communication service tax. Communication service tax, the one you and I pay when we make calls and buy data bundle, is part of what? Indirect taxes. So that is going to be coming there. Oh, customs, I didn't put the figure down. Customs, I think that's 20,000. Wow, then I need to make sure I pick these items up very well. 1, 2, 3, 1, 2, 3. Customs is 250,000. I didn't bring that. Communication service tax. That is given to us as 100,000 Ghana cedis. Next one is royalties. Royalties. Royalties is also part of the income that the government receives, and so that will go under non-tax revenue. Royalties, and that is 40,000. These are royalties received from minerals, natural resources, those kind of things, petroleum, oil and gas, those things, all right? Royalties, so non-tax revenue. Some comments in there. Kofi Poku, thank you for the good work. You are welcome, Kofi. So we're finished with the first slide of the notes. Let's go to the second slide. Established post. So immediately you hear certain language like established post, it means that directly what are we doing? We are going to the compensation to employees or compensation of employees, all right? Can you please read again the requirements of the question? All right, the requirement of the question is to prepare the statement of revenue, and expenditure, and a statement of an expenditure of the Consolidated Fund in comparison of the budget for the year ended 31st December 2018. Are you okay with that? I mentioned that you can send me a message on WhatsApp and get the question sent to you, or better still, you could also send me a message on Skype. My Skype ID is Premium Educator, and you can also have the question sent to you there. So we are preparing the statement of financial performance, but with each comparison of the budget, and then also the statement of financial position. That's the B aspect, and then the C aspect says the notes, which is part of what we are doing here, the workings. Okay, so that is it about that. Nana Kofi, I hope you are okay. So established post, let's bring it up. Established post, I have 240,000 Ghana. We bring it up. Oh, too many zeros in there. Just 240,000. Still writing more zeros. Can you imagine that? Okay. Next one, casual labor. That's part of employment, so we bring it there. So casual labor, 60K. Next one, travel and transport. Travel and transport. Now, when you hear something like travel and transport, that will be part of goods and services. Can you imagine? I didn't open workings for goods and services. How can I commit such an error? So let's put it here, goods and services. So that's going to be working 6, all right? Goods and services. This is where the day-to-day running of the administration of government or of the fund will be brought. So travel and transport. Travel and transport is going to be 70,000. That's what we have here. Repairs and maintenance, that is part of goods and services. So repairs and maintenance. Repairs and maintenance is 50,000. Then we have 13% social security contribution. So this is what the government pays for the employees, and that is part of what? Compensation for employees or compensation of employees. So 13% SSF, and that is 26,000. The next one, gratuity and end of service benefits. Gratuity and end of service benefits. That is also part of compensation to employees. Gratuity and end of service benefits, and that is 168,000. Okay. Next one, state protocol. state protocol. Now, state protocol will come also under the goods and services because that is part of the day-to-day running of the government machinery in that case. That will be part of the day-to-day running of the government machinery in that case. So things like maybe we're doing an event and some foreign nationals or foreign officials are coming in, how those things are arranged, all of that. That's what comes under state protocol. And it's a whooping 180,000 Ghana cedis. Can you imagine that? Next one, Independence Day celebration. Independence Day celebration. Now, definitely Independence Day will be part of goods and services. So we go Independence Day celebration. And what do we have here? 205,000 Ghana cedis. So let's go. Next one, seminar and conferences. That is a regular customer for goods and services though. Seminar and conferences. And we are having an amount of 30K, right? 30K. 30K. Next one, probation. Now, there's just one word there, probation. Probation is about, it's part of what we pay. It's like payments to employees who are on probation. Another name for that is non-established posts. Okay, so instead of non-established posts, we can have probation there. So people who are on probation means they are not established, they are not given a designated post, a designated office. We are trying them out, probation. So it's part of the compensation to employees, and that is 25K. Okay. Then we see property, plants, and equipment at cost. You got to be careful here. Property, plants, and equipment at cost. Then we see infrastructure at cost. Those things we're going to do workings for them later on under non-financial assets. Okay, we're going to do workings for that under non-financial assets. These are what we are going to be taking to the statement of financial position. That is the B aspect of the question. Then we see consumption of fixed assets, PPE. So these are the opening balances, because if you remember in the footnote, we were given the capital consumption for the year ended. Hence, these are going to be the opening balances or accumulated depreciation brought forward in that case. Here, we are not using depreciation. We are using capital consumption, but I'm just going to be using them interchangeably, but it's the same thing. Consumption of fixed capital on infrastructure. That is also the opening balance. We're going to be dealing with that in a moment. Grants to local government. Grants to local governments. That is also an expenditure, and it will come on the face of the statement of financial performance under the expenditure. All right. Remember, I told you grants are in two ways. The first one was a grant received, so it will be under the revenue. The second one is a grant that has been paid by the government, and that will be under the expenditure in that case when you are preparing the statement. So we won't do any workings for that. We won't add it to anything. We will bring it on the face of the statement of financial performance directly. Social benefits. We're not supposed to do anything about it. We'll bring that one also straight up. Subsidies cost. Definitely that one too, we won't do any workings for it. This could be subsidies on fuel, subsidies on consumption expenditure, subsidies on utilities, any amount of relief that the government is giving for the reduction in the cost of something, or it could even be subsidies to businesses, all right? All of these things, so maybe, or subsidies to farmers. So maybe the fertilizer is 20 Ghana cedis per bag. The government can say, let the cocoa farmers pay 15 Ghana cedis. So government has subsidized it by 5 cedis. That is also an expenditure, and that will go to the face of the statement of financial performance. Next one, domestic debt interest, external debt interest. Okay, so we have our debt interest, public debt interest set up there. So let's bring it up. Domestic interest. That is giving us an amount of, let's see, 400K. And then we have the external debt interest. That is 520,000. All right, sweet, simple, straight to the point. Then the next one, we see domestic debt. Now you see that it's on credit side. So that is going to the statement of financial position under non-current liability. And we see external debt. Also, it will go to the statement of financial position. That's about 1.8 billion Ghana cedis. That's against 1.2 billion Ghana cedis in the local currency. Then we see loans and advances. That is a statement of financial position item. So that will go to the statement of financial position under current assets. Loans and advances are short-term loans that the government can take from the Consolidated Fund, or government gives to public service workers or to other institutions for the short term. So loans and advances will be under current assets when we go to the statement of financial position. So that is the statement of financial position item. We aren't going to be touching it here in that case. Equity investment. Remember, we had investment income here of 20,000. Okay, so this is the equity investment, and this one will go also to the statement of financial position under non-current assets. So it's a statement of financial position item under non-current assets. Then we see cash and cash equivalent. That is 90,000. That is the cash and cash equivalent. Certainly at the end of the year, so we're going to be bringing that figure up under. It's having a debit balance, so it's a current asset. We're going to be bringing it there in that case, in the statement of financial position. Then we see other expenses. Other expenses. Now, that is also a single item, so it will come on the face of the statement of financial performance and the expenditure. So far, there are a couple of things that are coming straight up on the face of the statement of financial performance and the expenditure. And these are: 1, the other expenses; 2, subsidies cost; 3, social benefits; 4, grants to local government. All right. So these 4 items, we are not going to be adding them under anything. They are on their own and will come on the face of the statement of financial performance. That is very critical about that. Okay, so Grace said, please, how will the grants to local government be treated? The grant to local government is an expenditure. Okay, so that will be treated under the payments when we are dealing with the statement of financial performance. Always, the grants to the local government is an expenditure. Because we are preparing the consolidated fund, it's an expenditure. But assuming this account was the final account of a local government, an MDA or MMDA, then the grants they will be receiving will be part of their revenue for that period. I hope you get a difference. Alhaji Jallo, hello. I hope you're doing well. It's been a long time since I heard from you, Alhaji. Then I see Augustine too. You are welcome to the stream. Grace, let me know in the chat if you are okay with the explanation on the local government grant payment. Then we see accumulated fund there having a debit balance. Now, your accumulated fund is technically supposed to have a credit balance, but if it has a debit balance, it means that is a negative thing there. And we're going to be looking at that after we prepare the statement of financial performance in that case. Now, like I mentioned, there are not a lot of things happening in the footnote. The only thing given in the footnote that we're going to be using in our workings will be the footnote 2, which is the consumption of fixed assets for the year under consideration, 20 million for equipment and then 30 million for infrastructure. So when we add them up, it's going to be 50 million. So those things too will come on the face of the statement of financial performance in that case. And then we are going to be subtracting it from the non-financial asset schedule, which we'll be looking at in a moment. So these are, okay, Grace said yes, thank you, you're welcome. So these are the workings that we do so far. Because of the space that I have here, these are the workings that we do. So let's add them up and let's see what we get. So let's see. And you make sure you confirm, all right? So 200 plus 120, that's 320, that is 370. So 370,000 here. Too many zeros. Oh, it's like the zeros when I'm writing them, it's nice. All right. We go to the next one here. That's going to be 180, 250, 100, 530,000. Then let's go here, 140,000. Next one, compensation of employees. Now, like I said, there was nothing in the footnotes about outstanding, that kind of thing. Okay, so it's a simple question. There's not enough happening in it for us to be thinking a lot about it. So let's see, 240, 60, 26, 168, 25. I'm getting 519 on that. And then let's look at the public debt. That's going to be 920 here. Public debt interest, 920. Then let's look at goods and services. $70 plus 50 plus 180 plus 205 plus 30. Independence Day, yeah, it was 205. So 535. All right, 535. So these are the workings that we do first. Okay, so we have working 6. We're going to do working 7. That is going to be the non-financial assets schedule. Then we will do working 8. That will be okay. The non-financial schedule will have the capital consumption in there. So then after that, we can now prepare the financial statements. I'm going to snap this as well and post it on my Instagram page as well. So in case maybe you can't see anything, I'll be snapping it and posting it on my Instagram account. So you can follow me on Instagram, Nhyira Premium, and then when I post them, you will be able to see it. So let's take the pic of this one. Okay, so we're good. So I'm going to give you a few moments to finish writing. For those of you who are writing, then we look at the final workings, then we can now prepare the financial statements. So remember that now when we go to our statement of financial performance, we're going to have direct tax, indirect tax, non-tax revenue, then the grant, which we didn't bring, 150 to be coming there, then the payments, this guy will come, this one will come, this one will come. Then we're going to also have the other 4 items that I said cannot be categorized under anything. They will also be coming in there. And then the capital consumption comes in and we go away. All right. So let me roll and let's look at the next one that's going to be working 7. So we want to do working 7 as a non-financial assets. This is where we deal with our property, plant and equipment, infrastructure, and those things. So working 7, non-financial assets. So if we check the non-financial assets in the question as we were given, 2 broad items stands out in the non-financial assets. We see property, plant and equipment at cost, then we see infrastructure at cost. So let's put it down. Property, plant and equipment, and then we see infrastructure as well. Then we're going to have the total at the final column. So let's bring the opening balances, all right, at cost. So cost brought forward, let's bring them up. That is for 300,000 and 400,000 respectively. And that gives us a total of 700,000. Now remember in this question, we aren't computing the depreciation. It has been computed already. In some cases, for IPSAS 17, the examiner will ask us to either use reducing balance or straight line method or that kind of thing to be able to calculate our capital consumption. But in this case, the examiner is generous. He's giving us that, okay? So all we will do is to bring our capital consumption. So in bringing our capital consumption, we'll bring both the opening balance, which is in the question respectively as 50,000 and 80,000. So the balance brought forward 50,000 here, as against 80,000 here, making a total of 130. Then the one charge for the year, okay, charge for the year will be in the trial balance, and that is 20,000 against 30,000 as well. So charge for the year. This is what will go to the statement of financial performance, 20,000 and then 30,000. That's going to add up to 50,000. Now you have to be careful about the zeros. We're working 3 zeros up already, and there are 6 zeros given to us in the information provided. So we're going to just bring 3 zeros of it in that case. So I think that is all. So let's get the carry forward. So this is what I said. This total of 50,000 here goes to the statement of financial performance as the capital consumption for the year. Okay, as the capital consumption for the year, 50,000. Then we get the carry down or brought down the carrying amount of the assets in that case, which is going to go to the statement of financial position. So the carrying amount, let's see, that is 70,000 minus this. That's going to be 230,000. That is 110,000 minus this. That's going to be 290,000. That is 180. So in total, it's going to be 520,000. So you can confirm these figures up as well. So that is our note 6, and that is for the financial assets. That's for the financial assets. So because of the way the question is structured, these will be the workings that we can look at, and the workings that we can consider, especially in the question that we are solving in here. So now that we've done the workings, 7 workings like this, let's answer the question to the or for the examiner in that. So let's clean this up. So I want to manage my space in here so I can have everything I need. But also I want to take into consideration the fact that I don't want to have a lot of things together. So I'm going to divide this space into two. Okay, I'm going to divide this whole space into two so that we work our way out. Don't worry about the other side. I'm going to turn the camera so you can see from the other side as well. I think this space appears bigger than this. Let's see if we can do some equal division. Okay, something like that. So let's go to the A aspect of the question and let's answer it. So the A, we are preparing the consolidated statement of financial performance of the consolidated fund for the year ended. But the examiner said we should compare that with the budgeted information. I don't know, but the examiner is just giving us some headings here. So consolidated, no, not consolidated. Statement of financial performance of the consolidated fund. For the year ended 31st December 2018. So let's go. So the way we present is very important in the exam hall. So let's go. We're going to bring the notes in here to take care of our workings. All right. Then remember the examiner said we should bring the actual against the budgeted. So we're going to be bringing the actuals in here against the budget. There is no need to bring the variance in here. Then we work in zeros up. The way the figures are even structured, we could work in millions, though, but let's just work in thousands because that's what was given in the question. Working in millions will make the figures look too small, but we could also do that, and that would save us all the 3 zeros, plenty we are writing. So the first thing we bring is the revenue, okay? So if you remember our revenue items, we're going to have direct tax. That was note 1. Indirect tax. Note 2. Non-tax revenue. Note 3. Grant received by government. There was no note that was directly given to us in the question. So let's go. I snapped my solution, so let me refer to it. Okay, so I'm seeing my actual direct tax to be 370,000. Indirect tax 530,000. Non-tax revenue 140,000. Okay, so these are the actual information. Then we go to the trial balance and we pick the grant received by government, and that's 150,000. Now remember, the examiner said we should do the actual against the budget. I'll come back to that, but I will be putting here total revenue. Then we look at the expenditure. So under the expenditure from my workings, compensation of employees, we need a workings for that. So let's bring it up, workings 4. That is 519,000. Public debt interest, workings 5. that is 920,000. Goods and services, working 6, that's 535,000. All right. Then capital consumption for the year from working 7, we are taking this total of 50,000. Okay. So these are the items that we did workings for. Then remember, there were some items that we said they will exclusively be brought on the face of the financial statement. So let's bring them up. Things such as grants to the local government. Grants to local government will be brought there. And the amount is 290,000. Next one, social benefits. That is given to us as 315. Subsidies cost. That is 245. Then I think that is all. That is other expenses. We have it there. That is going to be 20K. So these are also the actual expenditure that we bring. Are you getting it? We did workings for some of them. Whilst the others are directly given in the question, so we pick them up. So we're going to be getting the total. Then after getting the total, we're going to be bringing the items in relation to the budget. So let's go to the budgeted information and let's pick the item in there. Compensation of employees. Okay, they started with the expenditure, so let's go there. 490,000. That's not good. They spend more than what they're supposed to spend. Goods and services. Goods and services, 350,000. Direct taxes, we have it above there, 400. We've not reached the target. Indirect taxes, 600. We are short of the target. Public debt interest, 800. I guess we paid more than that. Probably we borrowed more during the year. Subsidies cost, 240,000. Subsidies, we paid only 240, so slightly below. Social benefits, 250,000. We paid 350. Grants to local government, 260,000. That's 260,000. Grant to local government, 260,000. Then we see grants from other governments, 150,000. Grants from other governments. So there is grant here, 150, 150. So meaning that this grant was not really like grants from other multinational or donor organizations. Capital consumption, that is not all part of our budget. So that is dash. Non-tax revenue, 200,000. Then other expenses, 40,000. We spent less than that. Does it make sense? So you see how neatly we have presented our solution. So let's get the totals up and then let's find out what is going on in here. So total revenue is going to be marking up. Total expenditure is also going to be marking up. So let's see what's happening. Let's add them up real quick. 270, 530, 140, 150. I'm getting 1190. Like I said, we could have ignored the 3 zeros and work in millions, and no problem about that because the zeros are not really meaningless here. 1350. We are falling short of our budget. Let's deal with the total expenditure: 519, 920, 535, 50, 290, 315, 245, 20. I'm getting 2894. When we add up here, 2894,000. So definitely we are going to have a deficit in here. 490, 800, 350, 260, wow, 250, 240, 40. So 2340. All right. So we have all these items given up here. Now we deduct them respectively to get our final answer in that case. So when we deduct them, let's see what we have. Okay, this is 2430 rather, not 23. 2430. So let's deduct them. I guess the expenses is more than this. That's going to give us net deficit. Net deficit. So let's see what we have there. So since I have this, let me take it out 135. 1350. So it will be too much. 2430 minus 1350. That's 1080. That's a deficit, so we put it in brackets. 2894 by 1190. Also a deficit of 1704. 1704. Okay, so that is our income statement as the net deficit or operating deficit. Now, once you prepare the income statement like this, quickly you have to do the workings for the accumulated fund so that you know what will go to the statement of financial position. So I'm going to do the accumulated fund here under workings 8. Accumulated fund. Now remember, we were having the accumulated fund with a debit balance of 746. So that would be the opening balance. So brought forward, is it 746? 476,000. Then we'll bring the operating or the net deficit here from the statement of financial performance. 1704. There is 1, 2, 3 here. Now, remember the accumulated fund was having a debit balance. That's a negative. And we are having another deficit. So that's also double. So the balance brought down. That will be taken to the statement of financial position. Let's add it up and let's see what we get there. So 1704 plus 476. That's 2,200. Let me make sure in my working slide. So 476 1704 476 plus 1704. It should be 2180. And it's still negative. And this goes to the statement of financial position. I hope it makes sense. This goes to the statement of financial position. So that is the A aspect of the question, the income statement. I'm going to leave it like this, and then let me see if we can do a statement of financial position here. There are not much in items here, so let me see if we can just put it on the page there so that I can take all of them in one picture when posting them on Instagram for you. Any questions? You put it in the chat box for me, okay? Any questions? Okay, so let me turn my camera a little bit to that end. So that you still have your income statement here, and I'm going to go here. So let's go to the statement of financial position. That is the B aspect of the question. So statement of financial position, just trying to see if I can, as at 31st D's 2018. So in the statement of financial position, still working in thousands, we're going to work in 2 cash columns, and then we go away. 1, 2, 3. 1, 2, 3. We're going to put notes here because there were a couple of items we did workings for that must come here. So we're going to put notes there. Then, as always, we're going to bring our assets. Then our assets will be split into current and non-current. So let's look at it. So assets have non-current assets. Now, in the non-current assets, remember we've done workings here. So we're going to pick it and take it there. So property, plant, and equipment, or sometimes we could bring it as financial instruments. Did I say financial instruments? Non-financial assets, like the total will be brought there. So for PP, the current amount 230, that's note 7. So let's take it to the second column. Then infrastructure is also there. Still note 7. That's 290. Then we saw in the question there was equity investment. All right, equity investment, and I told you to be coming here straight up. Where is that? Equity investment 200,000 just after the loans and advances. So these are our non-current assets. So that's going to be 720,000. So let's bring our current assets. We're going to have the cash and cash equivalent, as well as the issue in relation to, how do we call it? The loans and receivables, okay? Sometimes it's loans and receivables or loans and advances. We didn't do any workings for that, so we bring it up straight. That's 90,000. Then I'm having cash and cash equivalent. That's also 90,000. So you add it up to 180,000. You add it up, that gives us total assets. So that's going to be 900,000. So that's going to be our total assets of 900,000. Then we bring the equity and capital accumulated fund and then the liabilities. So accumulated fund and liabilities. We could bring the liabilities first. Under the liabilities, we have non-current liabilities, and that is going to be the external debt, the domestic debt. So the external debt, domestic debt. So we have the external debt to be 1.2 billion. Some plenty zeros in here. I don't know why these zeros are more inconsistent here. Let's see. And then external debt, 1,800. The zeros are a bit irrational here, though. And that is going to be added up to give us 3 million like this. And we bring the current liabilities. In the current liabilities, we have sundry creditors. And that is going to be 80,000 in that case. So we add it up, and that gives us total liabilities. And that is going to give us an amount of 3,080,000. Then we bring accumulated fund. Which we did a workings for under workings 8. And that's -2, 180, 123. Okay, so it makes sense. So that our accumulated fund and liability will be equal to 900,000, and it's positive. So our statement of financial position has balance. Okay, Grace said, please, what's the first item under liabilities? Under liabilities, we have non-current liabilities, then external debt, domestic debt. So under liabilities, the first thing there is non-current liabilities. Then you have external, domestic, and then it goes. So our statement of financial position has balance, sweet, simple, straight to the point. So this is how we prepare the statement of financial performance and statement of financial position of the consolidated fund. So I'm going to snap this as well, and All right, so you've seen it. So I'm gonna snap this as well. And like I said, I'm gonna post this on my Instagram page. So you can follow me on Instagram as well to see it. Okay. All right. So this is the answer to the question, but we are not done. The C aspect of the question says the notes, okay? It says prepare notes to the financial statement. Now, part of the notes are the workings that we've done, 9 workings, that's part of the notes. But we will also speak some English and tell the examiner about the accounting policies that is being used here. Now, definitely, we are using the accrual basis of accounting to prepare the financial statements. That is how we were able to recognize the expenses and then the income. Then the depreciation charge policy or the consumption asset here, as you can see, we saw that we were using the straight line method because if you can see here, you realize that they are charging it a fixed amount on the cost in that case. So we look at it also, the interest expenses was also brought. That is the issue there in that case. Then we saw also that we were preparing the account in accordance with the government charts of accounts. So these are some of the things we bring under the notes in addition to the workings that we have done. So this is the answer to the question. Very simple, sweet, straight to the point. Any questions for me? Any questions for me? Any questions for me? Okay, Patience said, please, what is the first item under current asset? First item under current asset is loans and advances. Loans and advances. Loans and advances. Josephine Annan said, please, sir, can you take a question on MMDA? Then, please, where are you expected to write the notes? The notes should be written as part of your workings, okay? So the working sheet, we ended on note 9. So you just continue with the working sheet with the accounting policy that I spoke about, where you talk about the fact that the financial statements are prepared in accordance with the IPSAS, and then the government charts of accounts, the methods of depreciation used, and those items. So that'll be part of your workings. Then, because your notes, the notes to the financial statement is your workings plus the accounting policy. So Josephine Annan said, sir, please, can you take a question on MMDA? Okay, we may consider that. If it is something a lot of people are requesting, then we may consider taking it up. So I'm going to be posting this on my Instagram page, and If you would want us to take the MMDA, you can comment below that as well, and let us know if it is something that a lot of you guys are looking for. Then definitely I'll take a question on that. This is on the central government, okay? This is on the central government. When it comes to the MMDA, it's going to be a little bit the same thing, but a number of things are going to be different. Like for instance, we may not necessarily have direct tax, but we may have other items there. They will also be receiving grants through the District Assembly Common Fund, and they may not be giving any grants out. So there is going to be a bit different as well. Patience said thank you, and then Daniel also said thank you. Samson said, "Sir, can you go through the net financial assets again?" Okay. Are you saying the net financial assets or the non-financial assets? Let's see. The non-financial assets, I hope this is the workings you are referring to. What do we have there? Samson, I hope you are referring to the net financial assets. Let's look at the non-financial assets. So the non-financial assets, in the first thing, we are giving it at cost. Then we are giving the accumulated, let me look at the word. The consumption of fixed assets, opening balance, is on the credit side. So that is the accumulated depreciation or accumulated consumption. So we bring the opening balances, they are at cost. Then when it comes to the capital consumption, the opening balances will also be brought, and we're going to be deducting that out. Then we will look at the consumption of fixed assets charged for the year. In this question, we were not supposed to do it. It was given to us directly in footnote 2, 20,000 for the property, plant, and equipment, and then 30,000 for the infrastructure. So 20,000, 30,000, and that is 50,000. And it is this 50,000 for the current year charge that we brought into the statement of financial performance. Where is it? 50,000 here. Then we subtract the opening balance and then that one that is charged for the year. So the two items will be taken from the cost. Okay, so these two become accumulated depreciation, and so these carried amounts are what we take on the face of the statement of financial position. So that is it about that. Samson, I hope you are okay. Does it make sense? Grace is saying that, sir, please, I second Josephine Annan. Okay, so we having two people. Okay, Gordon is also said, yes, I am support of we taking an MMDA question. All right, so it means that, sir, please, why did you term it as non-financial assets? Yes, because property, plants, and equipment are called non-financial assets. Okay, because these are properties that are used, like they don't, they are used for the day-to-day running of the organization. So we call them non-financial assets. The financial assets are things like equity, investments in that case. Because they don't generate revenue like by themselves, they just aid us in doing our businesses in that case. So that's why we call it a non-financial asset schedule. Does it make sense, patients? Okay, Samson said, thanks, sir. All right. So more or less like we are having a lot of people raising, 3 people so far. Okay, so let's see what happens. Josephine raised the motion and Grace seconded, and Gordon also is asking about that. All right, so like I said, I'll be posting this on my Instagram account, and You can also comment below it if you want us to take the MMDA, and definitely we could take that tomorrow, all right? We could take that tomorrow. Once you guys want it, we can do it in that case. All right, patient said it's okay. So once you want the MMDA, we can take that tomorrow, if that's gonna be possible. Yes, definitely should be possible because I'll be live streaming. So if I'm live streaming, what else will I stream than what you guys want me to stream on? So definitely we will see and then look at that. All right, we will see and look at that. Okay. So remember, like I said, this is a done deal area. Okay. I'm gonna try and see if I will get an MMDA question with a footnote, okay? Because remember, this question doesn't have a footnote. So to me, it's not a brainer, all right? It's not a brainer. It's the footnote that is going to be bringing some headaches in here in that case. And Grace, if you remember the question we solved in class, we've solved the question 34 in class, and it took us yesterday and today a whole 2-day session to just solve that question, the footnotes and the requirements of that. And you can watch that on the study portal, Grace, as well, to know that. But I'm going to try to get a question that has a footnote so that we can know how to do the adjustments for the footnote as well, to be specific, since we are going to be focusing on the MMDA. So let's see if we can take that tomorrow, God willing. Any other questions, please? Any other questions? So I'm going to be concluding around here today. Thank you very much for joining the stream. It's always a pleasure coming your way. My objective, as always, is to be able to provide you with some assistance so that you can prepare well for the examination. I want you to go into the exam hall with confidence, write the exams, come out with confidence. When the results are released, you can look at it with confidence, and by the grace of God, you will pass and then take your life to the next level. That is why I come live to come and do the streams with you, so that I will also answer some questions and provide you with some strategies that you can prepare well for the exams. All I ask in return is that you make sure that you stay connected and you share the channel as well with your friends, colleagues, so we can reach as many students as possible. There are a lot of students who are not getting things like this, and they are not really studying well. That is why I decided to say that, hey, let me come your way, find time, and also be able to assist you. So thank you very much. It's always a pleasure coming your way. Samson, Nana Kofi, Gordon, Augustine, Grace, Alhaji, Patience, Josephine, Daniel, and all of you guys, thank you very much for everything. Thank you very much. Patience said, God bless you more. Amen. Thanks for your time. It's always a pleasure. So I'm going to see you same time tomorrow, 6, did I say 6? 4:30 p.m., all right? 4:30 p.m., same time tomorrow. And like the request has come, I think more than 3 people saying that. And so we're going to take the MMDA as well tomorrow and look at a question under that and see how we're going to look at it. But like I said, I'm going to try to get a question that has a footnote with it so that we know how to do the footnote treatment with the trial balance. Because when it comes to the footnote treatment, you must make sure that it is treated twice. 99.9% of the items in the footnote must be treated twice. Once in the income statement or the statement of financial performance, and the other in the statement of financial position. 99.9 means that a couple of items, you just treat them once somewhere in that case. So God willing, tomorrow we will continue with our discussion. Keep on studying, keep on working hard, keep on putting in the effort. Don't try to say, oh, I'm looking at this, I'm looking at that. No, spend time and then make sure you put in the effort and work hard. So wishing you all the best, and then I'll see you same time tomorrow. Grace said, God bless you, sir. Amen. God bless you too. Thank you very much. Good night, and you take care of yourself. Until we meet tomorrow, stay blessed. Bye-bye.